Welcome to the Forex, and here we're looking at the US dollar index, and it has fallen rather sharply, and it has moved through the 80, which is also the 50 and 61.8 retracement level here for this particular move up through here. This move down through here may not have completed, but just before we get into that, either way, we were looking for, we're looking for at minimum an A wave, a B wave, and a C wave here. The alternative, as we were looking at yesterday, was down for wave 1 here. This wave 1 may be completed here, or it may be further down through here. When we look at this situation here, we've got on the 20-minute chart, we can count this down as 1 and 2 and 3 and 4, and then down into 5, finishing down through here. But at the same time, what we're actually seeing here is we're seeing the waves extend. So we're seeing this first one, this one here is a bit longer, and the fifth wave is longer here as well. So in reality, this long wave here can be the third wave here, and the fourth wave coming into play somewhere in here, and the fifth wave down through to here. So in a bit of a nutshell, it can still be unfolding in terms of even from this point here, 1 to here, 2 to here, 3 to here, 4 to here, 5 to here, just in that, just in the third wave here with me. So it's got the ability to move down further. It has been slowing in this, in the session through here. You can see that it's slowed down from this fast move down through here. And if that's the case, we would expect a retest of at least that number there before we see further downside. But either way, coming back to the bigger picture here, this is it either like the 1 here, the 2 coming back into this area here, and then the third wave down through here. So it is in a bearish mode, which obviously puts the other currencies in this sort of situation. And the euro here, I think where we picked off last time yesterday was in here on wave 3 here. So we've got wave 1, wave 2, wave 3, and wave 4, and this is the way that I'd labeled the US dollar as well. So the way that I'd labeled it originally is probably right, and then we're looking for wave 5 up here. Now, I can get into this in a moment, but the main point here is that from this low here, we do have 5 waves up through here, okay? So that means that after 5 waves comes the counter trend. So we can look at, at an A wave, a B wave, and a C wave as such, and then further to the upside here. I think this is actually wave 5 in here. Just see if I can check for the moment. Just bear with me here. So this is the wave 3, the wave 4 here. And then we've got up for wave 1, wave 2 here. Wave 3 would be 1, 2, 3, 4, 5. So third wave here, A, B, C for the fourth, and a small fifth wave here by the looks of it. So this is the correction here. Look, it may not come very far back at all. If it did come back, then you'd be buying any pullbacks at 137.72 area through here, and then continuing to the upside. Because we've got whoops a daisy, because we've got a clear 5-wave structure here, then we're going to definitely get another 5 up through here. It's just how big and ugly this is going to, or is it going to get really small? I don't know. But what we normally do is that if the market finds support on top of group 1, which would be the 30 up here, support on that would take us to the upside. But in this particular case, because we're in our first 5 waves here, and we're only talking sort of a full point here, which would take us up to 139. But if we're going up to 139 from 138, then we really need to consider 140 as well, so we can be pulled up into that area there. So the idea would be just, we're supposed to be long above the 137.2 here, but scalpers would be should exit at or take part profit at 72, and the rest of it at the profit taking number 8 here. Look, one way or another, it may pay just to hold some smaller positions at different prices through this this group 2 range here, the centerpiece here of the 8 here, and also in group 1 here. That way, it just gives you more options to manage the risk. But anyway, main point is that it's up. And the daily momentum is kicking in too as a buying signal as well. So, try and go for the longer term trade here. The Australian dollar, I'm just going back to the 2 large accounts we have. This is the alternative count here, and the alternative count is basically up for wave 4 here to the 38.2 retracement level, sort of basically where it is now, so to speak. So this move up here can be counted as corrective. There's no doubt about that, because it's in three waves here. Okay, so it can fail from here and we'll get another 5th wave down. So we need to sort of, take that on board and not be sort of arrogant about that situation. And it is only yeah, sorry about that. Yeah, so I can do that. The other account is that on the weekly here is that we do have the low in place already, and then we'll just be moving up, and that's the way I've been counting it, as you know. Basically up for 1 here, back for 2, and looking for the 3rd wave up here, then the 4th, and then the 5th up through to here. So if we get 5 waves here, then we'll get the move back here, and then we'll get further upside here once we've got 5 large waves in here, and that's the way that I have been counting it. In terms of 1, 2, 3, 4, 5 for minute wave 1, back for wave 2, and then we've got 1, 2, 3, 4, and 5 up here for the 3rd wave, even though I haven't put that in at the moment. The other interesting point here, just while we're here, is that the 61.8 retracement level from this low here comes in at the 93 here, and we've actually pushed through that. So it's just a very small little thing that's telling me that there is strength there, and because we know that on this one and the Australian Swiss as well, the monthly momentums are coming in and giving buying signals, and it's kind of like looking at to those to give us that larger sweep to the upside. So that's just another little inkling that that we're on the right track here. Also, I need to just talk about the number 93 here a little bit. First of all, it's minor group 1, 90 is the medium level. Then we've got minor group 1, which is the 91, 92, 93, 1, 2, 3. And if we get support on 93, a nice tested support, tested support's where you've got activity above the level and it comes back and checks it, and then moves off from that point there. So if we get that on the 93, then we can be looking definitely further to the upside, okay? So in saying that, the normal, one of the courses, there's some variations on this, of course, but is coming up through here is the arrival, the reaction, looking for support, the classic trading levels pattern this is, and then the first high above the level. Once we've got that, then we'll be looking for the Elliott ABC correction across here. We don't expect it to come back below the 92. It can spike down, and that's okay, but not to find it as resistance. That 92 as resistance sets up the target to come back to 90 and below that. So, but a corrective pattern here to correct this whole move here, and then we'll be looking for support on 93. And if we get that in a reference point to work from, then we can be looking at much higher ground from that point there. So that's the kind of thing we're looking here. The other sort of main, sort of obvious, sort of big picture sort of thing is that when we're in a 3rd wave through here, it's normally the 3rd wave that breaks out of the trend line channel here. So we'd be looking for a move straight up through here if that was going to be the case. So we can look for that as well. But drilling into this here a little bit further, this is, if I just come back here a moment, from the wave 1 here and the wave 2 here, just to bring us in perspective here, because we've had a strong move up for 1 and back for 2. And then we're looking at And we're looking for wave 3 here, and in wave 3 we're looking at this in terms of up for 1, an A and a B and a C for 2. That may not be the right count actually, but we'll just run with that for the time being, and that's sort of okay because we've got this nice third wave up here, and we've been counting 5 waves up through here. And then we're looking for the reaction through here, the wave 4, and now we're looking up for wave 5 here. Now this can actually extend up here further, but we do have 5 waves in this little structure here, so that's what we need to pull into, and that would bring wave 5 of 3 or C here if we're looking at the bear market situation here. So just drilling into that a little bit. As you know, we're looking for wave 4 here. So we've got basically a wave 1, wave 2 here, wave 3, wave 4, and then up for wave 5. Now, you know, it could be counted a little bit differently for that, because this 5th wave here is the largest wave, and it could be very well could be a 3rd wave here as such, putting it here. But we'll just run with this for the time being as the A, the B, and the C. The 1, 2, 3, 4, and 5 here, and then we need to look at the 5 wave structure that we've got in here. Now, we can see straight away here that the 3rd wave is, you know, that's the middle of the 3rd wave. That's the strongest point within that structure, and the 3rd waves, as you know, are normally the strongest in most cases. So we've got the beginning, the middle, and the end of this cycle, this structure. So we can have a top in play here, and if we look at that on the smaller time frame of 5 minutes, coming from the wave 4 here, moving up, I've just counted this as basically the 1, 2, 3, 4, and 5 here. Probably not the best looking count that I can do, but it kind of fits well with the 3rd wave moving through here. So the whole 3rd wave in the middle here. So we've got basically 1, 2, 3, 4, 5 to here, for 1, 2, 3, 4, and 5 to here. And then we've got wave 5 up, which can be the 1, 2, 3, 4, and 5, or we can be 1, 2, 3, going across for 4 here, and then 5 up to here. So we're very close to a possible top here. The other important point here is that even if the wave count's not correct, you also need to notice that there is a beginning, a middle, and end in a cycle and in a trend of, depending on what degree that you're looking at. If we're looking at this degree here, we can see the building process here, which is very much like the ending process here, overlapping wave structures more so in this part here, and this being the strong part here. So even if I got the count slightly wrong here, it doesn't matter, it will fold back from the 72 or from the 50 here, and that's what we're sort of looking for in the bigger picture. We're looking for a corrective A, B, and C here, not going below the 92 area here. Normally the distance above here is the distance below here that it will go as well, so that's something to look forward to there. But don't go shorting this unless the midpoint here, the 93.50, is a retested resistance here, and we'll just need to drill in here a little bit more and have a look. I haven't actually pulled all this last structure apart, just haven't had time to do that just yet. Okay, so moving on, we're going to look at the Euro Australian, and it's still got lower to go. So we're still in this structure here, which would give us 1, 2, 3, 4, 5 to the downside here. We thought it may be moving up, but the 148 didn't hold as a retested resistance. It popped up and then just popped down. So we can look at this as a wave 4 and a wave 5 to move down, but we're getting there, not far to go. So we're looking at the 146.50, 14600 area through here. So we need to allow that to play out here. This wave 4 may get a bit more sort of complicated here, but the main point here is that this is 3 waves up here, basically the A, the B, and the C wave up through to here. So we would expect a new low to come into play here, but I wouldn't bother with this market just at the moment unless the 148 became a nice support, then go long. The The euro yen, and we'll look at the pound yen in a moment, both have the same counts, and they are moving down. So we've got basically down for 1, back for 2, down for 3, 4 and 5 here. That's not quite complete yet. This move down through here is not complete, but once it is complete below 140 here, then we'll see an ABC bounce, and it's this ABC bounce that you want to be looking at shorting. How far it comes up, well, you know, it can come anywhere really, you know. So we take it down just below here somewhere. It can come back to, you know, the 38, the 50, or the 61.8. It's normally more important to look at the closest largest number, so where the supply is going to be. So this block here is the main resistance within this trend to the downside, and that's probably likely where it would sort of bounce back to as such. But once this 5 waves here, after an A and a B and a C, will produce another 5 down as well. So looking for that short there. And the same with the pound yen as well. I've just pulled this apart a little bit further, that's all. But from the 173 high, we've actually got, because we were looking to see if we've got 5 waves down or 3 waves down, and we had 3 waves down to this point here, so then we had 5 waves up here, so we had the possibility of moving higher, but it just didn't eventuate, and we need to label this now as 1, 2, 3, A, B and C here for wave 4, and then wave 5 down through to here. Wave 5 will be the 1, the 2, the 3rd wave, the 4th wave and the 5th wave, just piercing the 170, and then we'll look for the A, the B and the C with the resistance at this block in here. So we'll have time to pick these up. It will take 2 or 3 days for this rally to develop. Yeah, then we can look to short it at that point there. I think that's it. Just wanted to have a look at this is the Australian Swiss as well. We've been sort of tracking this a little bit here. I just wanted to point out that just have a little look at this here. You know, we were looking at the 83 level, the top of group 1 here, and we can see now that we've actually got a clear 3 waves to the downside. So we've got down for 1, back for 2, and then in here we've got 1, 2, 3, 4 and 5 in here. So we've basically got an A, B, C in here. So we can push higher from here. It would be a bit of a hassle really, because we've got be up for 1, cross for 2, up for 3, back for 4 and up for 5 here, and then we would get an A and a B and a C across here, maybe even higher than this here, and then we'll push up from that side there. So look, you can go long from here if you want, but the 72 is what you'd be working on from this point here. This is 82.72, so it's actually a 272 number, a little bit like what we've had on the Australian dollar going long. Just drilling in here to have a bit of a look while we're here. Yeah, look, this is resistance. You could trade long from here, but you're facing unnecessary exposure. So you can pretty much, you're not that you're going to gain a lot anyway, you know. So there'll be some sort of reaction here, of course. But if it moves up through here, then it'll come back and test it and find support here. But because it's got this period here of accumulation here, this distance here, this is squaring time and price. So grabbing this distance here, you can swing that to the same distance to the upside here. Okay, that's pretty much keeping it real simple in squaring time and price. Yeah. Alrighty, that's it. All right, cheers, thanks.